Alright guys, so we're going to do a backtesting strategy today, and we're going to use DOT just because it's highly liquid. A lot of people trade it. It's on all the exchanges, and for me it's pretty straightforward. Like, you can look at it and you could see the M shape on the daily time frame, and then right now it's in full drawdown mode. We're at about 86% drawdown. So for BTC, an 86% drawdown from the peak top would be a full reset. Again, BTC takes a lot more people to sell for it to draw down that much. Obviously, because its market capitalization is a lot higher than DOT. For DOT, it's going to be a lot less, and then you go into like real shit coins that are under 20 mil, it takes even less, so they're down like 95%. And that's just the law of large numbers, right? The higher the market capitalization, the longer it takes and the more effort to bring the price down. So it's going to take a lot longer, not just because of how high the market capitalization is, but the big wallets that have to sell, they can't just dump and market sell because they lose money that way. So what they're trying to do is create a retail pattern that draws liquidity into the market and entices you to buy so that they can buy into strength and sell into your buy orders, right? And that's basically how the market has to move when you have big wallets controlling whoever the composite man is for the actual protocol. They need that liquidity, otherwise they lose money. They pay a premium when they sell. So this one's down 86%. It has a clear M shape. Some people would look at this, if you're a harmonic wave trader, you go, oh yeah, 886 M shape, this is where you buy. But not necessarily. If the trend is so strong, you don't just buy because you're given certain numbers and areas of value. Like, you really got to assess based on your strategy when to enter and when to exit. So the way I do it normally, and a few like really good traders that I know, they'll go into the replay function on TradingView, set the speed to like 3/5 of the regular speed, and then hit play, and then they'll start watching it as if this was in real time and try to understand, like try to assess in real time where they would enter and where they would sell. So let's start from the beginning, and I'll just try to run through maybe 2 cycles of up and down, and then we'll if you have questions, then we'll add it in. Things I use when I'm trading are usually, like you guys know, I do harmonics, so I look for wave structures, wave 1, wave 2. Then I look for support levels. So I always look for horizontal support, and then what I'll do is also look for maybe like supply lines, demand lines, that sort of thing. So that way you got diagonal and horizontal support. You have wave structure. Then I look for the oscillator I use. I mean, it's too early in the chart, there's no RSI data, but I use RSI. For me, it's just been a comfort thing, but I'm slowly starting to learn the awesome oscillator. Sorry, what's it called? I forget. Yeah, so awesome oscillator. It's basically a combination oscillator taking a few data points into one oscillator, and then it gives you a signal the same way like MACD or RSI. So I'm starting to learn that, but RSI has been pretty good for me. And I could go over my settings, but the point is we're going to do a real-time example of how you would backtest this. Alright, so let's begin. So first thing I notice, these shadows are coming in, meaning there's obviously some sell pressure here. People, after this run up from here to peak top, that was 225%, so logically there's going to be profit taking, right? There was basically from this wick that took a moment, like if you bring it down to 4 hours, you could see that acted as the first retracement point or profit taking level, and then it went to this next level here, and now your point of control is right here at the top, and that's where people are starting to take more profits, right, at 225% up. So the first thing I would mark in here would be that level, because that was a level where it hit once, twice, and then broke out and sort of back tested and ran. So that's like my first horizontal support level I'm going to be staring at. On the 4-hour, RSI is still bullish bias, and now it's like bearish convergence. But right here it's like testing to break higher. We'll see how that goes. Okay, it's finding resistance again. Alright, so on the 4-hour, what I see is the beginnings of a slight, like it's very subtle, the incline, but you could start seeing higher high on the price and lower high on the RSI. So this would be Class A bearish divergence. And it's showing that the relative strength of this move up is starting to lose steam. So the idea is you got to start paying attention to how it behaves at this level, where people typically step in right here at the point of control. It's trying to hold. Okay, now it's like on the 4-hour. Okay, there it is. So people, it broke down a bit here, and it's trying to find local support here. Here's the bearish control zone on the RSI. So 45 is when it enters below 45. Now you're in the bearish control zone. So that would suggest that the bias is to the downside and that the momentum is building to the downside. So your bias should be at this point negative. Even though like we're substantially higher than when the move started, it's starting to lose steam big time. Okay, so now it's dipped into the bearish control zone and it's still trying to find support in this area over here. So maybe you could draw in something like this. And by the way, stop me if you have questions, guys, while I'm doing this. Feel free anytime. So it's a little bit of hidden bullish divergence starting to show up now. So from here to here, slightly higher low. Here to here, slightly lower low, and now it's curling up. For you to validate this, what you're looking for is you're looking to make a higher low on the RSI and confirming it here. That's where you would potentially activate your hidden bullish divergence. So you want to see if it holds this area here, and that would imply bullish continuation. If it breaks down below the range low over here, then you would start to say that this was underperforming, the hidden bullish divergence. And again, it's hidden is always weaker than Class A bullish divergence, right? So your assumption going into this is already a weaker signal than this was, which was Class A bearish divergence. So this divergence was way stronger in theory than this one. So you would give more credit to the move down than the potential move up. So you want to see follow through over here. Oh, the other thing I use on the way up, just activate my EMAs. There hasn't been enough periods for the 89 and the 100 to print. It just started printing here. But I'm using on the way up the 21 and the 10. But on the way down, once it's been on its way up, I switch the EMA 2 to 25 because a lot of traders use the 21 and bots will try to game you by stopping you out just under a close of the 21. So they know that most retail is going to be using the 21 on the short band. So if you expand the band just by 4 periods, sometimes like there's not enough data right now to get an accurate representation, but as these candles start printing, once you're in an uptrend, expanding the EMA 2 to 25 gives you that leeway so that you don't get stopped out. So that's just like a little hack that I've noticed. All right, so it's still trying to hold this area right here. But what I'm seeing is it rejected the MA. So on the 4-hour RSI, it's now rejected the MA. So for me, this is kind of a signal that it's about to drop. So I would have probably seen it before that. Yeah, right here. This is, sorry, sometimes when I'm doing the replay, I might go ahead by 1 or 2 candles, but I'll just reverse back. But right here would be where I would expect, based on the rejection of the MA, a potential move down from here. So you want to see a bottom. Okay. Still nothing. All right, so leading into the move, what you can see that was developing on the 4-hour, you're starting to get rejected by these 2 EMAs, and now it looks like the shorter of the 2 bands, the 10, is starting to cross over the 25, and the price action is below it for the most part. So right here you're getting a lot of shadows that again suggests that people are selling hard in this area. So the problem is it's like equal and proportionate. The shadows on the top here are almost the same, like here, but this is still really strong buying support, so it's very like indecisive moment. Okay, so this is like this one was a furious candle down. How many percent? 6.4, not much. I mean, it's not that bad, but another thing I'll look at the main move. So if we're about to retrace, I look at where the 618 might be from where the move began. So some could pin it to here on this wick. Doesn't matter, it's like a very incremental difference, and then pin it to this wick right here. I use a different zone, so some people use the CC, which is like 61.8% to 65. Again, I'm assuming that I'm trading against bots, right? So I'll expand the zone to 60 and to 66, 1% in each direction basically, just to account for bot trading and algorithmic trading. So that way, like if you enter here at the 618, sorry, if you enter at the 65 at the tail end of this golden pocket here, and they like stop hunt you right away, then you're out of your position by 1%. So I expand it, and then sometimes I'll put my order right below, right here. So like it's technically 67 or 68, and that's fine. But this would be the target on a major move up like this, which from the wick bottom to the wick high, that was 163%. So people are going to take profits in this area. It's just human nature. All right, there it is. So you had the cross, and actually it already started closing. So technically, if you wanted to be very rigid with your rule, what you could do is in an uptrend, a really strong uptrend, I'll switch back the EMAs to 10 and 21. So in the uptrend, it will basically hold between the 2 short bands on the way up. And this is like a rule I learned from Christian Kulamachi. He's a fantastic swing trader, but he started with day trading. If you look him up online, he's just bought this mega yacht. Like, he's a real trader, you know what I mean? But his rule is on the daily, he watches to see how the daily closes below the 10, and then he typically gets out on the 10. But I'm using, like, if you entered at a really good area of value and you've already got like 70% padding in your position here, I think closing your position on a daily close or 4-hour close below the 10 is a little early. So I'd rather just watch to see how it behaves between the bands. And then see here, he would have gotten out of the position at 578. And yeah, it went a little bit higher, went $1 higher. But he's not wrong. And again, you would apply it to the daily. He uses the daily. And equities move slower, so again, you have more leeway. But for me, on the way up, I want to see it above the bands and preferably above the 10 and using 10 as support. Here's where it starts to lose steam. And you can see, even here, like technically you can drag this to here. Your first drive of Class A bearish divergence was here to here, because that was a higher high, and that's a lower high on the RSI. So this is like your first clue, technically, right here. And then this is just the larger drive, right? So that would be from here to here. But so at this point, your eyes are open. You're watching to see where it closes. It closed below the 10. You might get out of the position there, or you might wait. Because I think waiting, when you have enough padding in your profit, like you're already up 160%, I think you owe it to yourself to see, let the move play out and prove to you whether it's that strong or if it's starting to get really weak. So here, now that it's showing weakness, I switch the band 2 to 25. And this is that bot trading technique. So I want to see if I really want to stay in the position, and I'm thinking this is just an early pullback. Don't worry, hold your position, continue its strong uptrend. No real big deviation yet. So right here, this candle, we got the close below the 25. This might have triggered me. So this, at this point on the daily, especially like we're on the 4 hour because there's not enough data, but if this was a daily close below the 25 EMA, I would be, at that point I might close the position, because I mean you've made good money and you could leave a percentage in, like a moon bag, that's fine, but this would be kind of my signal. So even if it waves up again from here to here, all that did is it created the second drive of Class A bearish divergence. So that would be like your confirmation right here, and this would be effectively, this would be the area where I would likely pull any position that I have. So right here, that would have been probably where I got out. And again, you could wait. You could still wait to see how horizontal support holds or the SR flip holds. You could see how it behaves in this range over here too. So maybe you draw a little box, see, like I call it a reactive box or reactive zone. And yeah, so now we're printing here the 89 EMA, and it seems to get a really strong support on the 89 and in this zone right here, where it kind of pulled back here and it found support on the 25 over here, and now it's finding support in the same area. So at this point, it's only pulled back to the 382 fib. So right now, if it pulls back to the 382 fib for me, it's still not strong enough a retracement that would say this move is ready to reverse. It's basically, it's still in an area where I would say bullish continuation is still the bias at this point. So I want to see, the one thing I do see is we're like fastly approaching oversold. So I have my zone marked in on the bearish control zone at 30. So you see here on the lower line, this one right here, I use 30 because I want a black space here to identify if we ever get below it. So anytime we trigger below here, I know we're oversold. I start paying a little more attention to an entry, because that's where other traders are going to start seeing value when it's oversold, right? Where everyone panics, like average retail plebs will start panicking if there's a strong drive down from here to oversold. The real traders are waiting for that so that they can enter and basically buy into their weakness, you know? So let's see how this develops here. What I'm looking for is a bottom and then a higher low on the RSI. And if I get that, then like if I wasn't in the position and we already had a really strong move up, that would be a signal for me to maybe enter. Nuke. So they nuked it down basically to 30, and that is just before the 618. Pretty strong support on the wick there. but now it's rejecting on the 10 EMA on the 4 hour. So it's starting to look like it wants to come down more to me. Okay, so now it's in an area where you might want to start seriously considering a position, because it's more of an area of value now. Why? Well, number one, here's your golden pocket. There's your 618. It wicked into it. Strong buying wick, showing there's support from retail or whoever's buying. Also, that was the previous range high here and here, which I marked in with this line. So what that's telling me, the confluence is the 618 plus the previous range high is being flipped and tested as support now, basically here and then here. So where you want to still see it bottom, because like if you look at the RSI, it's still pointing down, right? So you don't know how much selling steam or pressure is left in the tank. You don't know for sure if this is a bottom, but this should trigger you to start considering a possible entry based on those two. Alright, so now another wick starting to form, showing buying support. Nuke. So that was the 786. Let's see how this follows up. So if you look at the RSI, now we're oversold, right? So this is that trigger I was looking for to see when we crack below 30. And then what I want to see again is the higher low for me to really enter a position. And if you get that higher low, that's when you might want to consider jumping in. It's still early, but let's see. So again, it pinned off the 10, then you got a bullish engulfing candle, but it's going right into structure here. 1, 2, 3. So what it's at risk of doing is where here and here it tried to hold its support. I mean, just like 2 hours into this 4-hour candle, it was rejecting it right in that exact area and at the 10 EMA. So it's, even though this is a good candle formation and it's showing that there might be deceleration on the down move, and here you do have your higher low on the RSI, plus it crossed over the MA. So for me, it's starting to look good, but you want to see follow through. So let's see the next candle. Alright, so this is perfect. So let me get rid of these two. Now this is a fantastic setup, and I'll show you why. So these played out, so I'm going to take those off. We understand why this was like a sell signal when it rejected the MA in a strong downtrend. So that was done. Now, one of the things I use normally is a triangle from here to here. So I'll pin it to the high on the RSI, and it's like an uptrend line, right? And I consider this my RSI cloud, where basically you have you're still within this RSI cloud showing resistance, you know, in the 4-hour time frame anyway. What you do have is a cross. So when you get this cross of the RSI and the moving average of the RSI, that's usually a good sign. And again, these are my settings. I'm using RSI length 14, EMA of the RSI length 12. And that's the one Wes Wilder, the creator of RSI, recommends. So I use that one. But you get a cross here, very bullish. The other two things I want to see is I want to see this get out of the RSI cloud and backtest the upper bound and continue. So start forming basically a series of very obvious higher lows with the RSI. And then the moment the MA gets out of the bearish control zone, so this white band, when it gets here, like 45, it starts to look promising again, you know. So that's another thing I'm looking for. So you see it's still not making the move, it's doing the inverse of what you wanted to see in the up move. Let me get rid of some of the noise here. Get rid of this. For now, I'll get rid of this. All right, and then get rid of these too. So here you want to see every retracement on the move up. You want to see it fall within the bands, find support, and then keep moving. What's happening here is the inverse. It's retracing back into the bands, so that's your impulse down. Here's a retracement back into the bands, and it's getting rejected. So that's the opposite of what you want. See, if you flip the chart, this is what you want in a bullish structure, suggesting bullish continuation, you know. But it's doing the inverse. So I like inversing the chart. It basically kills your bias, and it forces you to be honest with what the price action is doing in real time. The other thing it's doing on the RSI cloud, it's still within that relative strength resistance. But what it's about to do is basically backtest the MA, which is another powerful signal. So here you have your higher low on the RSI, crossover, and now you're trying to backtest it. So let's see if it does. All right, not bad. So the other thing you have starting to form on the 4 hour, which is all right. One sec. This is kind of a Bukowski reversal structure in the sense that here's your down thrust, here's your lower low, and here's your higher low. So this might be an early signal based on the price action plus holding the MA here, and now the RSI broke out of the zone. What I do want to see is the MA breakout next. That doesn't look right. Nope. Again, it's still getting rejected by the 10, so no confirmation yet. But this is an equal low, so it's like nothing happened really. Alright, so it's continuing to reject the 10. Now it's trying to get in the band. Alright, so this looks good. It's very close to, like if you extended this, now you got your RSI breaking out from the downtrend. Your MA is like about to peak out, not only from the RSI cloud, but the bearish control zone, this blue area. So if this white band gets into this range right here, what I'll do is set an alert right here. Oh shit, what happened? I'm trying to set an alert. Why is it doing that? Anyway, this thing was acting weird. Yeah, whatever. I don't know what happened. I updated my computer. Everything's been weird today. But the idea would be you set an alert here so that when the white band crosses that alert, it triggers you and lets you know, okay, we're in an area where at least the relative strength is breaking out. You might want to consider an entry. The other thing you have going on, again, because we're in a downtrend, the one thing I should have done was switch this back over to the 21. So you would get an early signal on any squeeze of the two short bands here. So here's the setup, basically higher low Bukowski structure, and then here it's confirming the higher low, and now it's setting up between the two bands over here. So right here, now it's squeezing between the two bands with the momentum shifting up. So this might be an entry. It would be an early entry. If you want confirmation, you want that MA to break out. Okay. So it's like it's barely peeking out. What I would actually wait for is this to come back and test here. Okay. That was really sharp. That's not going to look good on price. It has to hold here if I'm going to enter. I'm still not convinced. Alright, so now it's like gliding on the MA. It looks good. Hold on. So structurally, the RSI is giving a pretty good signal here. The other thing I'll look for, go back on the daily. This looks really strong. On the daily, you could see these shadows over here. So if I get rid of the noise, this is showing a lot of buyers are stepping in, and it looks really good on the daily. So this might be implied continuation. Let's see. Go back to the 4 hour. Setting up for something. This is really sketch. Hold on. Alright, let's see. So some people might look at this as, I don't trade this, but where is it? Something like that, right? So you basically have a sell wall here, ascending triangle, and you know, the move on the breakout would be a measured move from here to here. Again, I don't trade this normally, but from what I understand, if it breaks out here, your target ends up being around 602. So on the 4 hour, this looks really good. You broke out of the RSI cloud. You have your uptrend established now on the RSI. Your MA got out of the bearish control zone, and now you're holding the MA as support, and you're on the cusp of a potential breakout of this pattern here. And you've held this support line. So this previous resistance is now what I would say flipped into support. And your short bands on the 4 hour are starting to, you know, basically contract, and the price action is holding above it. It's early. What you might want is the range break over here from the wick. So like you might set a trigger here as soon as it breaks out. So a lot of people did, and a lot of people had their sell orders in the beginning. Once they cleared, it looks like the move is going to materialize. So this was a good setup, you know. It took time on the 4 hour for this to develop, but the things that we noticed on the setup, you had a nice strong move up, 165%. You retraced to the 618. You flip this key level here into support. Your relative strength developed nicely. You formed a pattern, you know, a short, like a midterm time frame pattern, and then you had a range break with a measured move to 602. So this would have been a good entry. However, again, you're going into structure again, so you know, you'd have your stop loss set pretty tight on this one. So again, your entry, you either could have been a breakout entry over here, and then I would maybe set the stop below here. Like that's a pretty loose stop, right? But I'm okay with it, like because I don't want to get stop hunted. So I'd put a pretty loose stop below the previous resistance over here, which you're assuming if it's a strong enough move, it'll hold it as support. So I would put it a little bit below here even. I don't care. And look what it's doing now. So now you're in the uptrend, right? So you would have switched your EMAs back 10 to 25, and it's holding in between the two bands nicely. In structure, anything can happen. Let's see. Hold on, let's see what's going on here. Okay, that looks weak. So you have a drive of Class A bearish divergence here. So I would be paying attention. If you entered on the breakout or on the breakout retest over here, you know, I would exercise caution, because now you have, yeah, so even on the RSI, you have hidden bearish divergence from here to here. You have Class A bearish divergence here. It's probably looking like it's going to come down and try to stop you out over here. Let's see. So what's happening now? The same support you had on the MAs on the way up, it's now rejecting it. My rule, my drop dead rule with this 4-hour RSI strategy is this. As this develops, it hit the bullish control zone. Here you would have wanted to see the RSI hold the MA as support and then impulse to a higher level over here. That would suggest a bullish continuation on the RSI, like bullish convergence. But then here you would want to see it tap here and hold and go up. What it does the opposite. It breaks below and then it uses it as resistance here. See? 1, and then it does it again. 2, bad. So that's telling me this is setting up to go down. And again, it could be fuckery too, right? Like a lot of people with big money, they could be painting certain patterns and like just trying to bait people, and then they'll send it. You never know. But for me, technically speaking, this looks like it wants to come down now. And it's at structure too, right? So okay, I like this. It held, basically this is your 50 RSI. Anytime you've impulsed up and you start coming down, but you show strength around the 50 and then you get a higher low, that means maybe the move is not done. Let's see the daily. I'll get rid of this for now. So on the daily again, you could have something like this. So that would be like your demand line. If you wanted to enter, you could enter on a higher low back here if it does come down, if you're not in the position already. This looks kind of toppy at structure on the daily. But again, the RSI held and it's still making a higher low from here to here. So although it's showing that it's like curving over and getting weaker, it's still a higher low. So this might still go up. If you're in the position still, you just have your stop and you know where you're going to kill it. If it stops you, it stops you. Again, this is all fuckery. Indecision on the 4-hour. Up, down, reject. So right here, yeah, it's starting to play downward. Yeah, there it is. But see what happened on the 4-hour, that demand line that we drew from here to here on the daily ended up being used as support. This was the perfect area to enter or re-enter right here. Because it's a confluent support, diagonal support on the demand line, 1, 2, 3. Also, that was your previous high, so that was your SR flip. 1, 2, this whole cluster, 3, and it's trying to hold it here. They might try to run stops here, you never know. Also, it went into oversold. Nah, this isn't gonna print. Maybe this to here to here. Actually, this looks more likely. So you have your first oversold area here, another oversold here, breakout. This right here would be a trigger over here. Bird Dog, for RSI BAM, would you use a breakout here at 45, or when it breaks below 30, above 30, when it starts crossing over the MA? Where would you trigger your RSI on this? Yeah, for sure, man. Because this to me looks like an RSI BAM trigger, like for sure. Right here. Yeah, this is it, man. This would go to the 789. Fuck it. This would be the move right here, 786. This is your RSI BAM trigger on a harmonic, and this is the wave, 100%. Absolutely, I would go in on this. This would be the entry. This would be the GigaBrain entry. All right, so let me make this more clear. Fuck this right here. This was our target previously. Okay, so for the ascending triangle, remember this was our target here, right? So our confluent target would be the ascending triangle measured move, also the 786 on a bearish Gartley. The first wave went down here, and then it retraced to the 618 basically, and then it made a higher low on the demand line, where you have 1, 2, 3 hits of the low. So this is going to be probably strong support, especially because if you look left, you have 1, 2, 3, 4 touches on the horizontal support flip, support resistance flip. This is the GigaBrain entry right here on Polkadot. Right there. But what I would want to see is, again, the higher low on the RSI. So it like right now would be an early entry. I wouldn't take it now. I'd want to see this go like here and then go. That would be enough based on the setup for me to start entering. And this would be your target. Let's see the next 1 or 2 candles. Sick. Why did it do that? One moment. Sorry, dude. Copy. Okay, there we go. Thanks, man. Thanks, Bird Dog. So this is a lower low. If this rounds up over here, from here to here, you'll have a lower low, and then here to here, higher low. So it's hidden bullish divergence. So it's not like the Class A bullish divergence, which is not good enough. You're right, this wouldn't be RSI BAM setup, but it's still fucking good, man. Let's see how this next candle behaves. Oh, they nuked it below. Yeah, this would have triggered my stop out for sure. I would have been stopped out there. See, it never formed, as the RSI dipped here, it never formed the higher low until now, right here. So now you're trying to see how it behaves. Yeah, it's still rejecting it. Okay, so what it's doing, it's using the MA as support now. 1, 2, yeah, so let's try another cloud. So this one I would have for sure got stopped out of. And actually this would be the more valid one from here. So it's got to hold that MA here and then continue. If it does, then it sustains the uptrend out of the cloud again. It would be good. Actually, hold on. Let me just move things around here. This would not be the low. That would be the low now. So it sucks because now it's under the demand line, which is bullshit. This is not nearly as strong a position. To enter. Make sure I got the EMAs set up right. Alright, so I had a squeeze here. And it's using the 10 as support, and now it's basing on the 21. You broke out. The the MA has to get above here, so I would set an alert. If my computer was working right, I would do it right now. See what it's doing? It's rejecting that key level over here now. So this is weak. But let's see. It's still curving up. At the very minimum, because this is now, the uptrend is pretty weak, I want to see it backtest over here before considering an entry. So here's your breakdown, breakout, backtest, run. Okay. So on the price action, I want to see it get above and then backtest that previous resistance over here, because we broke down below it, so it's important to reclaim before you enter. It's so choppy on the 4-hour. This is why I like trading on the daily. It's a lot easier to get a read. 4 hours, a lot more choppiness. Okay, let's see what the daily is doing. If it gets over here, this is the target. We're going there for sure. So they took liquidity out on that move. So see, that was the wick low. with a lot of buyers entering here, so there's a lot of liquidity built up in that area. That wick, if you zoom in, actually this would have been the proper one, it just wicked below it, so they zapped all the liquidity, which is why that, like if you're a liquidity trader and you're just trading that in order books and that sort of thing, you might be looking at this like maybe now that they got the liquidity they're going to move it up again, and then that would be logical. Nope. So what was this liquidity point? Alright, so that's the last liquidity point. So the ascending triangle idea is dead. The only one right now, if it holds the A point here, this is my target, but I need to see it break this level and then backtest and hold. Alright, so that same Bolkowski structure, more strong on the daily. So that again, let me make this right. So there it is, low, drive down, lower low, higher low. Got to break this range high and then back test. Let's see what the RSI did. Yep, it's broke out, higher low. Come on, fucker. There it is. Alright, so I wouldn't FOMO in on that. That was a 9% candle, but it's going to sell off and probably go back in. Alright. That's kind of like a shooting star. Yeah, so this on the daily, this would have been a candle set up like you're in an uptrend, and then you develop this kind of like an inverted hammer, but like shooting star in context. That means down. So on the daily, this would have been right here. If you were in the position, you would probably take profits there or close it, you know. Then you get a crossover on the daily MA, bearish. Alright, now it's finding major support here in this zone. So that's starting to develop as a reactive zone. Is that higher? Okay, so the other thing happening now, these are protected lows. That right there. Forget this one. So this wick down but didn't take any liquidity here, which means the order flow is still bullish, and they're going to probably move it up now, the big wallets. So they protected this low. When they retraced, they held above. Higher high. Actually, this is 1, 2, 3. Second valley, third valley. Yeah, so breaking above here, this could be a 3 rising valleys pattern. Alright, this looks like a better setup to me. So you have a 3 rising valleys pattern where basically here's where you, oh shit, what's going on here? So it opens here on the down move. You have valley 1, peak 1, valley 2, peak 2. This would be valley 3. Right there. And there's successively higher lows, right? So your goal is to break this neckline over here. And if price ascends from here and breaks the neckline, your measured move is from the bottom of peak valley 1 to the top of peak 2 applied to the neckline here. And now that is a confluent area as well. So between a potential bearish Gartley and a 3 rising valleys pattern, I'm starting to get really confident. For me, this right here is the critical level to break. So first, get over this reactive zone or reactive level, break the neckline, and then you have a breakout entry here. So let's see how this behaves. Also, the RSI on the daily is an uptrend, so bullish continuation. All right, let's go. They're protecting every cell. Okay, now it's holding the bands. So it's above the 10 and 21. Should get support. There it is. Okay, so rejected the neckline. So again, you want to see a very impulsive breakout on the neckline. There it is. Okay, so naturally, some of the predators were waiting here to take profit and sell into strength, right? So you're going to get, this is the daily, but if you break it into 4 hours, you're going to get the move up and then quick sell and then move down a bit. And then it's going to go right back into the bands. And then if it finds support, it's going to run. Okay, so we go on the daily. It looks like it found support. Yeah, this is full breakout mode. It's going to the target. What was that? So again, your entry would have been somewhere in here, right here, where it found support. You could have early entry here, second entry like right there. So this would have wicked down, and yeah, it would have stopped some people, but I think you would have been entered right here. Or you could have been entered here, so it wouldn't have stopped you out yet. It's still going up, there's no way. That was a fucking stop hunt. Nah, it's looking bearish now. So it basically hit the 786, but not exact. It almost hit the measured move, but not really. You wouldn't have been stopped out. You could still be in the position here, and it's still higher lows. I think I would be in the position still. Like I would have balls of steel and I would be holding. If I didn't get wicked out here, this is still higher lows. Yeah, I'd still be in the position. So one more thing to point out on the daily, why I would have had balls. It held on the entry on the upper bound of the bearish control zone. It held twice. So it's really trying to stay in bullish order flow. A lot of fuckery though. There it is. Okay. So that's your 786 getting hit. There. So this would have been your target, and you hit it, but you hit it later because there's a lot of fuckery on the way up, a lot of stop hunting. Now you hit your measured move on the 3 rising valleys pattern. It just took a lot more time to hit it, and it was done in 2 parts, 1 part, 2 part. You hit your 786, it would have been a reasonable profit taking area, but again, if you got in way down here, you're sitting on a pretty nice war chest now. So like right here, 51%. So you can move your stop up, or you can just stay in the position. I would move my stop up just so you stay in profit, you know. Let me get rid of some of the noise. Those protected lows held, which is good. It's kind of like a signal that we're in bullish order flow. I don't know, does anyone have questions so far? Alright, so this would be a logical point to take profit at the 786. You completed a pattern from here. Right there, 786. So if it's going to bullishly continue, what you're going to do is look for any retracement to hold above the 382. So even if it came down to here, to me this would still suggest we're in bullish order flow. So even if it did something like this, where now it hit the zone, it actually went right through it. And because this wasn't a 618, 886 would be a fine target as well. That would just be a bearish bat pattern. So that'd be okay. If it hit, even though it was closer to the 618, it was below 618 and above 50% on the first retracement, X to A to B. So this would be more like, technically this would be a bat. So 886 would be the target. But for me, I don't work with rigid rules. Like this is closer to the 618 than the 50. So for me, the 786 was the target. But let's say from here, people start taking profits. It can go all the way to the 382 and still be in bullish order flow. So I would hold my position and I would set, I mean, even the 50 right here, you're still in profits, and they might spike it down to the 50 on the retracement if everyone's taking profits. So I would even right up to like here, like 52, 53% retracement. I'm okay to be in the position still. So let's see how this over or underperforms. See? That's why you stay in the position. You don't just close it. If it's so bullish, there's zero reason to close it as long as your stop loss is somewhere reasonable. And now we have developed the other EMAs. So this is in obviously parabolic mode now. It was early in the price action, so we didn't really have the 100 EMA developed yet on the daily, and the 89 just started over here. But basically every retracement retraced into the 89 and 100, which for me is what I'm looking for on the daily. If you're in a bull market, it should always be holding in between these bands. And if it's in parabola mode, it's going to use the 10 and the 21 on the way up. These two. It hit the target. You could have taken profits. That's fine. But again, I would be patient. If it's a strong move, you make your money not from these like small moves up, because right there, if you took profits from your entry, I don't know where it was, like right over here somewhere here. So if you took profits here, you only made 44%, but you missed out on 125, so you missed out on 80%. This is why, like, these people that preach take profits, yeah, but like, you make 90% or 80% of your profits generated come from the big move. So if you're like a squirrel and you're just reacting, like, oh, I hit my target, blah, blah, take profits, you're missing out on the lion's share of the move, right? So this is where the big traders make money. They'll take like one position a month, but it's such a solid, high conviction, confluent position that the real money is in holding it and then just moving up your trailing stop. So that's why, yeah, you could take profits here, but I would rather, now that I was patient from here to here, like this took a long time to develop, right? But because you were so patient, the moment you broke this neckline, and again, there's like a macro pattern here too. So from here to here, and then you have a cup. Ah, it's janky. Nah, it's not perfect. It's kind of like an Adam and Eve, but it's not perfect, so I won't call it that. It's more of a harmonic wave. But yeah, the point is, don't close your position early just because you're in profit. Rather, move your trailing stop up, and if it triggers, whatever, it triggers. You move on. But let the larger move play out. So now you're looking for exhaustion of trend, right? Here to here, it's implying bullish continuation still. A lot of support here on the wick. Kind of looking toppy though, the way the RSI is rounding on the daily, like that. So let's see how that plays out. Again, I wouldn't close the position until, now that we're in parabolic uptrend, I'll switch the EMA to 25. If the candle closes below the 25 on a pullback, that's my trigger to maybe take serious profit. But if it wicks into that zone, see, that's still fine. See, if you closed early just because it wicked down hard, that's to get a reaction out of you to close your position, right? But the next move, up. Now if this EMA, let's see how it would have been if it was a 21. I'm just curious. It's kind of on the line, so not really. That wouldn't have done anything on this one. See, you would have missed out on so much by just closing here. The additional gains were 139%. Alright, so there it is. Now you have Class A bearish divergence developing. It's not perfect, but higher high on the price, lower high on the RSI. Any breakdown below the MA and then retest where it fails to break back above the MA, then I start getting a little weird. Oh, what's up, Roberto, man? See, you don't have to get out of the position. Oh shit, delayed reaction, bro. What's going on? Oh, dude, it's just a blessing to have you, man. How lucky are you motherfuckers on the line, man? Yeah, yeah, yeah. Yeah, yeah. Fuckers, bro. The scams, eh? The pure scams. Late night Asian scams, bro. That's what I'm saying, man. Oh, that's perfect, man. Yeah, that's a huge edge, bro. That's why, like, I was staying up, man. I was doing the Asian markets, like Long Dong Wang, bro. I was up late trying to catch the 5 a.m. pumps, dude. That's something I learned from you. Like, stick around for the 5 a.m. pumps. Oh, dude, man. I gotta move to Vietnam or Dubai, man. Let's get these trades going. But then you gotta get a douchebag Bentley, bro, the canary yellow. Fuck that guy, man. He's got money. It's ours now, man. Really? Shake CZ, bro. Yeah, man. Dubai's bomb, man. It sucks when you get wicked out at. You get stopped out overnight, dude. There's like you can't go to bed without the stop. You know what I mean? Not in this volatility, bro. Like, what if they spiked it down to like 4 grand? You know? So. Yeah, yeah, that was good, man. Yeah, yeah. It's trying to hold, man. ETH is like trying to hold, dude. Yeah, BTC, there's no TA, man. Just scams, bro. Scams. Yeah, look at this, man. Look on the daily. It held the lower bound, held the upper bound, still got a pump. When it broke below, it back tested it, failed down. Next level. Dude, I drew these levels out like months ago, man. 1730 tried to hold when it failed on the 4 hour. They probably, yeah, no, it wasn't even an attempt on the 4 hour. But it went right to the next level, 1440, and now it's got a nice buying wick. Let's see. Bubble boy, man. The fucking Polish hammer is on the line, dude. Oh yeah, Simon, what'd you long, bro? Nice, nice. Hey Simon, could I long pierogies, bro? Could I long pierogies with sour cream and bacon, man? Cabbage? It's too intelligent a conversation for Simon, bro. What was I doing, man? Oh yeah, fuck, we're on dot. Yeah, so yeah, it's good, dude. Put it louder, man. Ah, it's light, man. It's like white noise, you know. Yeah, I was just going over, dude, the setup here on Polkadot and replaying it, you know, like what I'm looking for on entry, and then how to basically backtest it. But hey, the one thing I didn't mention on the stream, guys, when you're doing this in real time, let's say we're over here, mark in whether you would have taken the entry, right? So like, just put in buy. So if you decided, you know, over here, buy, write it in real time, and then when you test it, say you play it out. Alright, so if you play it out and then it works when you're doing your strategy testing, what I'll do is go into here and give it the thumbs up. And then that way, like when you're done doing the whole chart, like from top to bottom, and you've done the test like 8 times for your entry and your stop, or like your exit, then you can say out of 10, I hit 8, my win rate was 8 out of 10, or I hit 80% based on the strategy I used to take the entry, you know? So like if that was your first proper entry, which by the way, that was my second one. I don't know if you guys remember, but like I would have got stopped out somewhere over here. I can't remember where, but so at this point I would be 1 for 2, but because I had a stop and I was managing my risk, my loss was very minimal. It would have been probably like 5% or whatever, 1 to 5, somewhere in between. But based on the entry over here, that next move was real impulsy. So it would have been like, where the fuck would it have been? Somewhere around here. I don't know, let's say from here. It's like 116. So basically, even if you hit at the end like a 33% win rate, 1 of 3, but your stop out was only like 5%, and your upside on the big move, you didn't take profits early here, but like I said, you leave it in the position and move your trailing stop up to an area that's kind of safe, and then just let the larger move play out, then you're still up like 120%, right? So even if your win rate is 33%, but you're up 120, who gives a fuck, right? We all lose. It's like, that's not the issue. We're all going to lose. Even the best traders are like 40% win rate. That's like top shelf trader, you know? So the key with these back tests and how you game out your strategy is you got to log it, and you got to basically know what your win rate would have been in real time when you're using the replay function. Otherwise, like if you're just looking at the raw chart without replay, like you're looking at it, you can already see what the move would have been. You're cheating, you know? And then that's like, you're only cheating your own positions down the road. So like, see, you would have stayed in the move here. Now you got class A bearish divergence, first show of weakness, but it never played out. Again, what I was saying earlier, I didn't get to it yet, but for this to actually play out, I would have wanted to see it break below the MA and then backtest the MA like here as resistance and then go down. Then I would say on the daily, this was going to be proper bearish divergence. So now what it's doing is class B bearish divergence, where you have higher high. It's very subtle, but like higher high on the RSI and even level of price. So this is your class B bearish divergence. All it is, it's just a weaker version of class A, which would have been this one. So now you have basically two reasons why this is probably going to lose steam. You hit oversold here at over 80, and then you have a strong bearish divergence, and then you have a smaller class B. So now you would start looking for that daily close below that EMA trick. Remember, I move it up. When we're in the up move, I move this to 25 just to game the bots. So if I get a closing candle below the 25, that's when I'll close my position and maybe re-enter when it's time. So right here, now you got that class B bearish divergence has now developed into full-on class A bearish divergence, sort of. From here to here. See, if this next move goes even higher on price, then it's like guaranteed it's coming down. Yeah, it's already started the move. There it is. Okay, so let's see how the RSI moves over here, but this would be now higher high. Okay, that looks toppy. Now you're getting these shadows coming in. This could be the one that sends it down. Yeah, that looks toppy to me. Nope. Remember the rule, it's still holding above the two short bands. So you don't get out of the position just because you're presented with divergence. The idea is you wait for that, you know, you have to have hard rules on when you exit a trade. And if it closed below this yellow band, then I would be out. But I wouldn't close it until it's confirmed. Because look, you miss out again on more upside. The one thing for sure though, it's like really extended right now. This parabolic arc is really like it's a hockey stick now. It's just going straight up with no, it's just it's not mean reverting at all. It's just holding, but that's a good sign. That means this is like a very strong coin, right? Look at this shit. It won't stop. Yeah, it's like bullish convergence all the way up. So these ideas are dead. These never played out. It was too strong a token, and even though it presented, it followed my rule where it still held within the bands with the extended 25 on the EMA too. Now it's showing some weakness, but it's still, look at that shit. Alright, so here we have convergence. Okay, here we have like a subtle drive of bearish divergence. Still holding. There it is. So here it closed below. For me, this would have been my trigger to take profits. See, on the 21, they could game, bots can game you, and you can, I would have gotten out here, but there was still a move up, and depending on how this played out, yeah, this is also class B bearish divergence here on the RSI. So all, like, two of my main reasons for getting out of a parabolic trade would have been triggered here. The adjusted, one moment, the adjusted EMA2 to 25, we broke below and closed below on the daily, and we had bearish divergence kick in from here to here. Very subtle incline, but you'll see the RSI lower high. So this would have been 100% where I would have closed. Yeah, there it is. Now, what I want to see what I want to see is holding the 100 and the 89 for this to be a continuation. But also, I'm looking at the fib retracement level. That's your high. So it perfectly fits right here between the 89 and the 100 and your golden pocket right there. So this is where I want to see a reaction. If the move is going to continue, this is my drop dead level. If it breaks below here and I don't see a giant wick, and then it's suggesting it's going to mean revert at this point. So I would have already closed the position, and see, it's already holding. This looks like it's holding at the 50. Sorry, the 50 EMA. I guess the 55. Yeah, so it held at the 55. Alright, so now it's trying to make its way back into the bands. So here's where we left the bullish control zone. So on the daily, I'll set up another triangle here. Actually, that wouldn't be it. It'd be like this from this one. That was our last interaction with the bullish control zone. And I extend it out here. So for me to re-enter, I want to see the MA break out of here and the RSI. Almost. Damn, that made a move. Okay. Alright, it actually would have been here. So right here, when the MA breaks out, that would have been for sure an entry for me. Not for sure, but like it looked like a pretty low risk entry. Yep, and it's bullish convergence. Okay, I don't like that. So if it backtests the MA and rejects, then I would have probably stopped my position right away. It's looking very sketch. But it's trying to hold the bands here. Alright, let's see. Yeah, very indecisive right now. I would have got stopped out. So now I'd be like 1 for 3. So then I would just basically put here stopped. However, even if you get stopped out, it's okay, because I've been stopped out and I re-entered like within an hour, you know, because sometimes it's by design. It wants to stop people out, and then the idea is once people are stopped out, you can jump back in and you're good, you know. But this one would have been 1 for 3 so far. So a lot of support in this area. And again, you're finding support on that bull market continuation band, the 89 and 100. Horizontal support, big wicks, showing there's people coming in. I don't see a change in the wave structure, just, you know, equal lows, higher highs. It's trying to, the MA is going to come back into that triangle. Nothing really to see there. Yeah, so okay, continuation. So when it re-entered the two bands, I would have had this on the 21, and it's shit that you got to keep adjusting it, but I don't know, it's just rules I have. But right here, so again, here it's holding with pretty good support in that reactive zone. So if it's holding these, you know, bull market bands and it's re-entering the squeeze, you could enter. Also, you're again above the triangle. I would wait on a back test maybe. Yeah, so like, okay, there it is. So this is the back test I was waiting on. Once the EMA held off, the MA held on the top of this triangle, and basically the RSI retested the MA. The next move looked pretty good. And then that's a bullish engulfing candle, so it's pretty positive. No divergence, good entry. It keeps testing that, eh? Yeah, so there it is. Holy fuck. That must have been May 19. Yeah. This is when BTC crumbled. Like, this is not accurate TA. This is bullshit tied to BTC. That's why, like, this, it's not black swan, but it's unexpected turn in the market that had nothing to do with the TA. The setup was great. This would have been a good entry, but that specific day is when BTC crumbled, right? So going into it, this is fine. It was holding these bands. Like if I take off, it was holding these bands, the 89 and the 100. So as long as it's holding that and it's showing deep shadows on there, that would have been fine. And even if it got back into this zone, like here, you could have re-entered on this candle, or you could have re-entered here. That would have been fine. But obviously there's BTC is wrecked it. So stop out. This would have been now 1 for 4, but you would still be up a lot of money at this point. 25% win rate. Your downside on these stops would have been between 1 and 5%, just based on how much you're risking on every trade. The move up would have been from way down here. So if you held your position from the entry down there, basically here's where you would have got out originally, 705%. So you would have fucking murdered this one based on the strategy. So that's why, like, the whole reason I was doing this today, guys, was so you could be accountable to your own trading style. Don't assume because you watched a YouTube video or you saw some guy's chart, they're doing it like after the fact. You know, they got to see the whole chart. Basically, it's already here. That's what you're seeing on their chart when they're posting and all that bullshit. When you go into replay and you run it back to here, you're basically testing using your skill set. Would I enter here? Would I exit my position here? You're being honest and accountable. When you start stamping on the chart where you would have bought and where you would have sold, once you've gone through the full chart, you should have a win rate at some point showing you like how good your strategy was for that particular coin. So you'll know if you're like 25% win rate, and then you'll know what your final number was. Did I make for the entirety of the chart, if I took every entry and every exit, was I up 400% or was I down 8,000%, you know? And that's how you can test your strategy if it's good. Don't test it on a full chart. Test it on replay as if you were trading this in real time. It's like a version of paper trading, you know? So I don't know if anyone has questions, but now's the time if you guys have questions, because I'm going to bounce in like 5 minutes. And don't be shy, guys. Like, everyone has questions. You know what I mean? These streams are like an opportunity to ask. It doesn't even have to be about what we're doing on stream. Anything TA related. Like if you have questions, just feel free. Or don't and get wrecked. Dude, it's like they just paused ETH. Like fucking circuit breaker. No more trading. Suzu doesn't want this to go to 0 yet. Dude, this is actually going to hit the 70 cents on Kadena. I'm going to take this one. Perfect. Perfect structure. This is going to 70. Damn. Could go lower though. Right there. 36, 31. Yeah, fuck it. I won't even buy 70. 36, 30. Bounce at 70 maybe. This thing came back. Near was looking trash and then it came back yesterday. Or today. That was a nice move. 1, 2, 3, 40%. Alright, so I'll be like 5 more minutes, guys, if you have questions. Do you guys use the strategy testing? Or like, do you guys use replay? Neat. Damn, that one hit. Win 0. This thing got wrecked. Blew past the 1618. $12 next. 375, almost there. And then final target 0. This is such a good short. Holy fuck, you'd be wealthy shorting this. By the way, guys, with BTC, this is going to be a bounce coming up. Where is it? Right here. Like, regardless of what happens with equities, I know they're going to crumble probably tomorrow. Oh, sorry, Danya, what's going on? Yeah, for sure. Try to silence you. You must be in Canada. Oh no. Well, it's good now. Like, how are you talking right now? Are you on phone? Ah, okay. Yeah. Nice. I'm glad that you got on your phone then. That's good. All right. Rob, one, I'll be back in 1 sec. 1 sec. Hey, Danya. Yeah, sorry, I had to step out for a minute. All right, so like fib, we could do a whole session. I could, like honestly, you could do 12 hours on fibs. It's probably the most complex form of trading. Like pi fib traders, they have a lot of rules, but I'll give you basic ideas on how I would use them. So again, coming from the place of a harmonic trader where we use a 5-point reversal structure, right? So here's your 1, 2, 3, 4, 5. Counter pattern trend trading means here's where it reverses, right? So we use, this is your first fib right here to here. So basically this is your first wave, X to A. Your retracement is the first fib we're looking at, 46% drop. So then it reverses back up again. It's counter trend trading, right? So then it reverses to a higher high over here. And basically that is from A to B. 100% of the move would end right here, but it went to 123, 124% here basically, right? So that next move in context is a higher high. So then based on the first two fibs that we have within this structure, this one's close to 50, right? 50%, and then a higher high between 113 and 1618 tells me that the next move either goes to the 886 or the 113. That's like the most probable two fibs this will go to. So then the idea is with harmonic traders, we're just putting together complementary fib ratios, right? So wave 1, 50% retracement. Wave 2, with a higher high, likely 86, you're going to get a reversal potentially. So let's see what that would look like at 86. So from here to here, your 886 is right here, and that's exactly where you got a reaction. So I know Rob was trading this and he did really well on the way up. He crushed this one. But like here's your 886 reaction, 37%. But then it dies. So if that was the only context you had for this one, sorry, one moment. So if that's all the context you had, you would measure, I'm like scattered right now. I should be doing the basics and I'm jumping into like next like lesson 2 shit. But the idea is, okay, hold on. No, I'm not going to do it this way. This is like a bit intermediate. Forget that. We'll do basic right now. Let me go into a coin that I don't have drawn up. Here's a shit coin. KNC USDT. Trash. Look at that. It broke the parabolic arc and then it dropped like 75%. Okay, let's see if I could use this one. Alright, so if you're just trading on fibs, what you're looking for is, here's your double bottom, right? So let's mark it up. So this is your highest value entry, 1, 2, coming off a major downtrend of 66%, right? So now you have an established range high and you have a double bottom. Alright, so your first move up, when you break the range high here, takes you to this high right here. And then you show a lot of sell pressure. Again, this is the 2-day, but if I break it into the 1-day, you probably get more data. So here it is. 1, 2, 3, 4 really strong shadows in that range. So like starting here and up to the peak here. So the idea is you're expecting a reversal, and again, whatever way you determine it's ready to reverse, that's up to you. But like just looking at the wicks for me is telling me after this double bottom and break out of the range high and backtest, now we're pretty much like it's ready to come down. So what I'll do then is pin from the low. So this is where I anchor on that wick, and that's your 100% to the top right here. That's my 0%, my origin point. Again, I'm using the fib retracement tool, and my settings are basic. I use 0, 382. I use a modified golden pocket, 60% and 66. Where is it? Yeah, and this one, 66. And then I use the 786, 886, the 100, 113, 1272, 14141, 1618, and then 2618, 3618, whatever. But then I changed the color on the modified golden pocket to yellow. So I basically do a base color of white, so none of the other ones stand out, but I want the pocket to stand out here. And I add a percent both directions to make it a bit wider, the variance. So on any impulsive move where this is only one wave, right? I mark in where the golden pocket would be over here. And that's where it retraces to, but there's no guarantee that's where the reversal will happen or begin. And there's no guarantee, like it tried to hold 382 here with this strong wick, but it fell through. So you always want to see follow through, you know what I mean? Let's see what happened here. Yeah, you had a divergence set up here, class C bearish divergence, but the point is, it tried to hold 382 and then it made a lower high, and then participants in this shitcoin sold off. So then what you're looking for is, if I leave my fib on the chart, these are the levels I'll set alerts at. Just before the 50, so now it's gonna, like if this is an asset I'm thinking of entering, I'll set my alert right above each key fib level. So there's your 50. And then 618, I want to go a little bit above, like 59% over here. And then you can remove this. Forget this because we already broke the range. So I know these are my alerts. This is my 50 fib alert, 618. When this is triggered, so that would have been triggered right here on this wick, the follow through was another down thrust and it broke into the 618. So this is gone. This would have been triggered already. My next fib target, the 618, triggered here. What you want to then see is like stabilization after that down thrust, right? Because from here to here, the down move was 46%. So it's like a pretty substantial down move. And that down thrust creates value in this lower area, especially because that was the previous high on the range break. So like if we take here to here and extend it, that was our range break that we basically doubled. We hit the lower bound, the upper bound, consolidated under structure and broke out, back tested it here, and now we're trying to hold it again and flip this into support. So what you want to see is that stabilization. If I get this many wicks in this area, it's showing that there's a lot of volume, a lot of people are seeing value in this zone. So the next thing I'm looking for after this starts establishing is either a bullish engulfing candle, which we have on this one right here, and then you see the wicks here, so people are comfortable buying at a higher price here than they were down here and here. So that's like a first signal of maybe a trend reversal and a continuation. So that's how I treat the fib levels. I'll just anchor at the bottom point, and then I'll anchor the range high or the top, and then I'll set alerts at all the key levels. That way I'm aware when they're triggered. And this would have been the last one triggered at the 618. And then when I see a signal on the price action that, yeah, you got 4 consecutive major buying wicks over here, and then a bullish engulfing candle, and then you have this wick at a higher level, then I'll check my EMAs, and then I'll see it's squeezing above it here, then it's holding the band on the 10. So like now it's holding the lower bound of the bands. Here's your range high. Here's your range break. Everyone enters. I don't enter on range breaks. I wait for the retrace or the quick sell-off. And then if it lands within the band, again, we're in an uptrend, so I adjust my 21 to 25. And if it's holding around 25, here's your next engulfing candle. I'd be comfortable with an entry there once it breaks above again here, like maybe this candle here. So that's how I use the fib basically. But again, when you tie in harmonics or wave structures, there's a lot of applications. But Daniel, was there anything, like, is there anything specific about fibs that I should go over? And don't be shy. Yeah, he's been calling for you all day, man. Yeah, okay, Danya. Anytime you have questions, let me know. But that's like a basic application of fibs. And if you use it in context with two-wave structures, then the idea behind it, let me show you a quick example. So like here's one on BTC, 5-day, I think. So this is a 5-day shark, and you know, there's a specific wave structure I'm looking for. Here's your wave 1, impulse. Here's your retracement. It's around like 50 to 56, which is, you know, this is in the territory of a shark or a bat structure on wave 1. And then you get a substantially higher wave 2. If it goes out of the bounds of the 1618 by like 7%. So, one moment. So like around here would have been more natural. It would have been just under the 1618. This one's a little extended, but it's still in the same range. So when it hits that much of a higher high, the anticipation on the way down is it's either going to hit the 886, which was around here, and it got a nice reaction, but it didn't go, like if I fib it out from the top, C, to where it got the reaction here, it stopped short at the 382 and then continued the dominant move, which was down. So that tells me now that the 886 was violated, the next target based on the wave structure is going to be the 113. And the idea is, if you read Scott Carney's books, every first wave will have a complementary second wave fib that you're looking for. And the way it works is, you know, if you get a 50% first wave, 886 is your first complementary wave. If it violates, 113 automatically. And then if it fails at the 113, it becomes a failed wave, and then it's inclined to go to the 1618. So again, you could do like 12 hours on fib, and it's endless, but the basic premise is every wave up will have a retracement down, because that's the way the market moves. It moves in waves up and down. Impulse, mark down, impulse, mark down, or retracement. And then if you set those alerts at the key levels, the 382, the 50, and the 618, every time it triggers the alert on your phone, you're anticipating, it's like forcing you to look at the chart if there's support at that key fib. And if it keeps going in the direction of the dominant move, then your next alert will likely get hit, and what you're waiting is for it to stabilize on one of the fibs, or it doesn't even have to be on one of the fibs, but at least the alert will make you aware when it approaches it. And then if it doesn't reverse, you get a scenario like this where it violates the 886 and it continues the dominant move down with what I have as a target, the 113. And on the daily, you want to look if there's any confluence in that zone. There is some, like there was originally, that was resistance over here, but it's not major. The real one would be down here. But if there was a logical bounce, that would be at 113 at 24K. So I'm not even looking at 26 as support. I think it's going to knife through 26. There's nothing there. This is more logical. And then when you sync it up with the fib level, 113 is just a better level. It makes more sense, you know? Alright guys, thanks for jumping in. I'm going to bounce, but we'll probably do more harmonic and fib training too. Today was about backtesting. Again, do what I did in terms of keeping yourself honest and accountable by just going into your replay function instead of looking at the complete chart. That way it forces you in real time to make decisions when you're testing, and then mark it in real time. So like if you did your entry, if you were going to enter here on the replay, this is like a real-time trade, you would put in buy and then the thumbs up or down when it fails or it's a successful trade, and then you game out how this would have went and then what your win rate would have been out of 10. So then as you see, I would have got stopped out on this one right here when I re-entered. Right there, I would have got stopped out. Here's my other entry down here. I would have got stopped out again. So based on what we looked at on DOT, this would have been a 25% win rate, but my return, where I would have got stopped out 1 to 5%, but the return would have been well over 700. So who cares if you have a 25% win rate, as long as the wins are really big and the losses are minimal, you know? So hopefully that helped, guys. Try the replay function when you can, and if you guys have questions, let me know. I'm here.